Hello, welcome to a video of me simulating using my simulating software. So when I have some free time, I actually like to trade, backtest, get my mind right. So that's why when you see me trade live in real market conditions, I have less emotion and I'm pretty much straight to the point. I know what I have to do and what I don't have to do. Um, there's there's a couple different things about the market that you need to know. Very important. You can back test like this. Let me split this screen down. By the way, my freaking account history got deleted. I don't know why. I had some trades on Euro and it totally wiped it out. So I'm a little pissed off about that. But whatever. It was only just 3 trades, so I have to reset. I don't know. I think it auto saved when I back the bars up, and unfortunately, I don't have that date anymore. But it's okay. I'm gonna keep it moving. So, like I was saying, traditional back testing is you scroll, you move to a point in history and you scroll to the right. So you can see this is a pullback, this is a trigger, standard TC North right here, goes on up, and you can just do bar by bar like this. And this is a great way to learn. This is actually still my best and most recommended way to back test and practice. But there's another way to back test, and that is real time back testing, like real time back testing. And that is basically having the bars unfold for you. So we're going to do that in this video, and this is what the simulation software is useful for. There's a lot of times when you actually trade and you freeze up. How many times have you traded the markets and you actually froze up because the bar is moving in real time and it's ticking back and forth? And I'll show you how it looks in just a second. But before I do that, let's mark off my levels. I'm going to trade the gold today, and I'm going to mark off my levels. I actually traded so this is Thursday. You can see it's 23:59, and it's the second. So we're gonna go into Friday just in just a moment. I kind of screwed up. I'm a little bit upset about that because I had data and it totally messed me up. So let me just. So it's not showing the trades that I took earlier. Unfortunately, I don't know what happened. I think it auto saved, but let's just move forward. So the time is synced. So I'm currently using China time, and it's synced up to 13 hours ahead of New York. So New York Open for me is going to be approximately, I believe it's 10:30 my time. There we go. Let me move the bar forward. You can see the price action is moving. One cool feature about this is I can speed up the bars. I can slow it down. You can see this. These are hourly bars. I press the play button and it's actually ticking in real time. You see it's not really moving during this time, but when I speed it up, you see the data is moving a lot faster. Since this is an hourly bar, it's taking this time, and this is not London session. But I can just move the bar forward. Let's just fast forward it through a London Open, for example. Press OK. You can see the bar is moving like really quick. So this is like the hourly bar, and this is gonna complete this hourly bar within like a few minutes instead of 1 hour. So I have it on the fastest speed just to show you all. As I've been talking, this hourly bar has been showing the real price action by the tick. And so when you're trading live, this is how you're actually seeing the markets. It's moving by the tick, and the bar is formulating in real time, and you're looking at the chart as it is. When you're back testing, you don't get to see that. You see like something totally different. You're looking at the bar as it's already closed. So this is very useful because you're actually able to see how your mind performs when the bar is actually formulating rather than you can see at the bottom it's like by the minute. So this has been 30 minutes, and I only been talking for about 2 minutes since this bar has been open. 31 minutes, 32 minutes, 33 minutes. So every 5 seconds or so, it's 1 minute instead, and that's very useful for. Obviously, this is the hourly chart. We're not trading the hourly, but I just want to show you. So when we drop down to like something like the 1 minute chart, and we press a fast speed, it's gonna move a lot faster. So Look at that. So you can actually simulate the data really fast, but I wouldn't recommend that. You can also slow it down. So it could be sub-minute. So this could be like very slow ticks. You can pause it. You can move the bar back. You can move the bar forward. You can move the bar as forward as you want, as backward as you want. You could in each time frame, the bar is based off that time. So you can move the bar back every 5 minutes, forward every 5 minutes, and you can just get yourself ready for that session. So I'm gonna get ready for the New York session because I've done enough talking, and I want this video to be short and sweet. So, like I said, it's gonna be about 20:30. 10:30 is my time when the New York session opens. That's a little bit too far ahead, so I'm gonna push it back. And now what I'm gonna do is I'm gonna mark off my levels. So based off of the price action, we can see we're just gonna mark off from the weekly, daily, and so on. I click on the graphic elements to mark off my major levels. I see a major level swing high is swing lows right here, swing highs right here. So this was the last swing high right around here. I click and hold control and I drag it to duplicate the line, and that's it. There's no downtrend, so I'm gonna leave that one alone. Go to my daily chart, do the same. What I like to do is I like to keep the outside bars only, and we can see the last swing high and swing low is over here for that outside bar. So click and drag, swing high, just somewhere in that wick area. Click and drag, swing low. And that's about it. On the way down, it's irrelevant. I don't like to do inside bars because it's gonna make too much noise. So you can see this little downtrend right here. It was inside of this big downtrend, and for me, I don't like to. I stopped using these because it's too much noise and it's not really a major level. So I just leave it alone. I just want to see like the outside one. So like this one is an outside trend. It was like the last major up wave, and then we don't really see one until like way down. We don't even see a down wave, so that's irrelevant. The last one was like over here on the left. We can see prices starting to shift down, pull back, shift down, and that's it. So I don't want to mark off anything in the middle. It's just going to leave, make it too complicated, and I want to keep it simple. So what's next? I'm gonna do the same over here. I'm gonna look at the 4 hour. As we can see, it's doing the same thing. It was kind of like these levels are kind of like in between. They're inside, and it's just gonna add too much confusion. I know that the market has reacted from these levels, but it does break it. And to me, last swing low was over here. So if I was gonna mark this off based off of what I can see, I could say that's a major level right there. Swing low, we have a swing high, and then we have a swing low. The price is coming back into it, but the reason why I'm kind of concerned about this is looking. If I look at this level, price kind of just pierced through it this time, and it went way on up. In the past, yeah, we might have had, you know, some issues. Uh, Looked like price crashed into it, rejected it. Let's see the time. The time of the day was like London session, so it did reject that level, come on down, came back on up into it, came on down, came on up into it, actually broke through. So it's subjective. I'm trying not to mark these levels off too much anymore because, like I said, it's just a little bit of noise for me. I could use it still as a major level, but personally, I'm trying my best to keep the chart as clean as possible. Let's just use it for now. Let's just use a major level. One good thing about using this simulation is if it's not working out, I can just um, make a new rule and I can try it on the next day, and I can do all that within a session, within like an hour or two of me sitting down trading. But yeah, that's the last major swing low, and this is the last major swing high right around here. And yeah, I'll just leave them. I'll just leave the levels. Why not? Do the same on the daily chart. The last major swing high was like right up here. We can see it's kind of conflicting. I'll zoom in so you can see what I just did. Swing low, swing high, swing low, kind of comes on down into here. The price is currently pushing on up. This is why I was saying it's kind of like congested, and this kind of hurts my understanding of the market because it's too close. So I am trying to try different things out, um, but I don't want to do all that on the video. So I'm just gonna keep my same rules as it was before. And yeah, so everything is pretty much set up. And make sure these lines are permanent so I don't move it. And now we can look at the price action and see what's happening. So I just want to make sure that it's enough bars so it's enough of a zoom so I can see all the bars. And I'm going to start. Let's read the context. Let's get ready for the session. As usual, as you can see, it says 2030 at the bottom of my screen. And I'm going to start off looking at the daily chart to see the context. We currently have a bullish bias. Zoom in so you can see a little bit more. Price has rejected these major levels, is coming into this major level of resistance, pushing back on down. We are bullish. Can we see price potentially break on lower and start reversing? Or can we see price break on higher above 2064 and keep on going up? I would like to see it continue the trend, but unfortunately, we don't see that price has closed above that major level yet. So let's go down to the 4 hour for finer detail. I'm gonna zoom back out to see the bigger picture. 4 hour looks like we definitely rejected from that major level of support. Show you all right here the most recent 4 hour, and this is pulling back at the moment. So let's just look for some buys into this major level of resistance and potential beyond. So that's going to be my bias, is to look for buys into the New York Open. I do like what I see. Looks like price is creating some form of RB North to potentially take it on up. I also want to measure, see how many points this is. So this is approximately 6,168 points. So it's pretty much a huge level coming in. This is not futures. This is gold, US dollar based off of the Forex. So it is slightly different. We're measuring in pips and not ticks. I'm gonna do the same thing with the hourly. Just looking for a bullish time frame. If I see a bullish time frame, I'll trade it. If it looks bearish all the way through, maybe it's conflicting, and I'll start looking for shorts. But right now, we see that the hourly is still a bearish time frame. The last hourly close was bearish, but we definitely had a current push above, um, or not above, below the last hourly low. So if this starts to push on up, it is possible to start seeing price rise to the upper side. We do have 30 minutes left in this hourly, and I would like to potentially take a trade long if I get the right context. I always zoom out when I go to the new time frame. 30-minute looks way more bullish. As you can see, the context has shifted bullish. So this is a possible time frame to look for longs. We are in the middle of the range, so that's my only real problem. Our last 30-minute did close. It did close bearish, so we're gonna see what happens on this current 30-minute time frame. I'm gonna press this play button so you can see. See, the last 30-minute did close bearish. So yeah, we're taking out these 30-minute lows. If we can push on up, there's a possibility to take price on up to the upside. Um, for in Forex, you see it says 6,146 points. We're measuring by pips, and to get the pips, you're basically looking at the far right, and you're gonna see the last three numbers on the far right. So it says 6,146. It's really 146 pips. I know it's slightly different if you learn how to trade futures first before Forex, but that's a whole nother lesson. Don't worry about it. I'm just simplifying it so you understand the amount of points that I'm measuring. So if I measure from here to here, this is 146. Apologies for that. It's the top, it's the three on the left. I haven't traded Forex in a long time. Don't worry about what I just said. I'm just adjusting to this. I trade futures now primarily, so yeah, it's the far right. So the first three on the right is going to be the measurement in pips for gold. So you can see as I go up now, it's a 1,117 points. Before it was 800 points. Before it was all the way down here, 74 points. So that's going to be points are going to be considered ticks. Don't worry about that conversion. That was just my own. Just had to remind myself how to measure this, so um, it'll make more sense later. So now I'm going to be looking for longs, correct? So we took out those prior 30-minute lows. I'm going to wait for upside. What do I see to really get me into longs? I see that price kind of pull back here, swing high. Last swing lows there. We kind of coming into that swing high right here. And yeah, it looks pretty bullish to me. I'm not gonna stunt. And then also coming into here, we have a swing low, a swing high. Price is kind of closing inside of that swing low. The only problem is it is closing outside of that. So we might be conflicting on that 30-minute because it doesn't look clean enough for me to look for a pattern. This 15-minute looks really nice for a bullish move. But the question is, should I go long or should I look for something else? So the good thing about this is that the market's not moving right now because I paused it. And that's a good thing to do when you don't, when you're breaking things down, is you can actually pause it and resume it when you're ready. Um, you can do it every tick, every minute, 3 minutes, five, whatever, every hour. So when I press this resume button, it's going to print the bars based off of what I have the setting. So I have it as every tick, so that's why you see it moving like that. That's how the real markets actually move. But if you are trading, swing trading, or doing a higher time frame trading, you can definitely do like hourly, 30 minutes. It's all up to your preference. But we're going to stick to the tick. And yeah, now I'm just looking at the 15-minute to see if I see cleaner price action. And I kind of do. We can see that price is currently rejecting that level. So for me, I would need to see price close above the 26.55 level for some potential longs. If not, maybe we are going to start going down. And do I find a time frame to look for shorts? Not necessarily. A 30 minutes bullish. The context on the 15 minutes bullish and the 5 minutes actually kind of bullish as well. So for me, it's just a waiting game coming into the U.S. session. It also has the news at the bottom, so you can see the news coming up or the news that has passed, and you can see that's all marked off. Um, green is low impact, yellow is medium impact, and red is high impact. So right now there's no high impact news. We can specify it strictly to the currency. So if I click on this, go to chart settings. This is just advanced tools. We can talk about if you want to do a one-on-one with me. I can break this down more in detail. But filter news by chart currency. So I have all this set up. Don't worry about all that. So this is only going to show the important news based off of currency that is relevant to this. Gold, let's just keep going. So right now, I'm going to press the play button. And now that I have my levels marked off, and we're going to do it by the minute, we're going to speed this up. And I'm going to just be waiting for potential trade setup. Like I said, if we took out these levels and we start pushing up, it is possible to look for some longs. But I like to see this 30-minute close above this most recent low. So what I'm going to do is I'm going to wait for that 30 minutes to actually close. You can see that I have the speed sped up. So the bar is moving, 33, 34. It's taking its time because this is a 30-minute chart, but it is moving. So instead of me waiting like 2 minutes to find the end of this, I could pause it and then go on to the 5 minute, and I could just forward the bar. 5 minute, it closed higher. 5 minute, it closed higher. Now the 15-minute, I can look at that 15-minute close, see if I want to trade based off the 15-minute. It is possible if we close above. We close like kind of right inside that little bar. So it is possible to look for a possible long to the upside based off the 15 minutes. So I'm going to wait for a bottom wick, and I need a large enough bottom wick. So I'm going to wait for a large enough bottom wick, and I'm going to potentially get into this long. I don't want to chase this, so this is not a good long for me to chase. If it does go, whoop-de-doo. But I'm going to wait for a bottom wick, and then I'm going to wait for price to start to push on up. So I'm going to speed this up because I don't want to wait. It's kind of messing around. When I'm looking at this 30-minute chart, it's almost complete, so it's almost better for me to wait for the 30-minute close rather than just trying to chase the 15. You can see the 15 minutes faking out. We have 9 minutes left. Looking at the bottom, it says 2052 Friday at the bottom. So we're going to wait. As we get closer to the end of the bar, we can see that it's a fake out to the downside, actually. And this is not looking good. If you bought it too early, I can pause it now. I can go into the 15 minutes, see what happens. I can say, okay, I'm glad that I didn't take that long because there was no bottom wick. It faked out buyers and now they're attacking sellers. So is it possible to look for some shorts? Well, it would be if my bias is bearish, but because my bias is bullish based off of context, I can't even do that. So what I'm going to do now, because I do see what it's doing, it's not really setting up properly. I'm going to just press the fast forward button on the 5 minute and just basically keep it moving. So here we go. It's bearish, bearish. Still got some time left. You see it's returning. Still got some time left. So I just fast forwarded 15 minutes in front of you so you can see. And my session is usually an hour and a half, 2 hours long. So I'm keeping track of the time at the bottom. If I started at 20:30, I'm going to be trading until approximately 22 o'clock to 22:30 my time. So we still have plenty of time. So the setup is still possible. We can see that we have not closed above just yet. And I'm just going to keep fast forwarding the bar based off the 5 minute. Wow, that was a massive sell off. And that is really good because now we are coming into that support level. So for me, I'm going to pause this. I'm going to look at it. I'm able to just analyze this market condition at my own pace instead of having the bar tick in real time. So you can kind of see how I'm doing this. I'm trading as if it's a real market condition, but I'm pausing it at certain points because this is how I'm able to assess my thoughts and just kind of check myself to make sure I'm not making silly mistakes. Uh, you can be very comfortable with using this platform. It's not like you have the pressure of a real market condition in front of you where you have to react right away. I could pause this and I could talk to myself. I could say, okay, we're back into that major level of support that I marked off. The last prior swing high was right. Let me put my crosshair so you can see. My last swing high was like right around here. We can see there's a swing low right around here. So we could close like back up into here, pull back and trigger on this 15 minute. That would be ideal. Could we also see a 5 minute setup based off of this? Let me just check. Yeah, it's possible to look for a 5 minute setup. We can see the most recent several hours has been range bound. Pretty much price has been bouncing from lows to highs, made new highs, came back down to low. So is it possible for this to bounce back to the highs again and take out the 2662? That's what I'm asking myself. Or can we reject and come back on up? So now I'm going to press the play button. I want to just let this tick by the tick because I want to see what it's doing. Nice fake out. 2 minutes left. Wow. Okay, so we do have a major drop. So I'm gonna just avoid trading right now. There's no trades that I could take because the context is bullish, and I do not want to sell, even if it looks like it's tempting to sell. Let it drop. It's not my session. It's not my time to sell because I don't have any context to sell. Remember, if its context is bullish and you're getting selling setups, it might be a trap. So as we're speeding through, I can see that I have approximately 1 hour left at most um, to see if I can find the setup. I'm not forcing it. I'm just watching price react and reacting to the price action. So there's nothing. I cannot look for buys under a major level of resistance. It's just not possible because that's according to my system. It doesn't make sense. So I like to just sync it like this because I can see it ticking. I don't want to fast forward the bar because we're a little too close to a potential setup. I always say potential because it doesn't have to guarantee that setup. So as I'm talking, we can see the time is ticking in real time, and the price is moving on down. Unfortunately, I cannot find a setup off of gold, and the price action to me looks like it's possibly reversing to the bearish side, but it's still pretty bullish across all of these time frames. So I can't do anything. Let me move the bar forward, move the bar forward, move the bar forward, move the bar forward. Now we can see coming into that last 30 minutes, like I said, I could trade up to 2 hours if I'm permitted to. And I think that I'm going to get to the 2 hour time on my gold trades. Um, so finally, I'm going to just sync this up. Let's see what's happening right here. too much time. Forward, forward, forward. Looks like gold may end up just staying below for the session, unfortunately. So I can just sync that entire session, and I can tell myself, okay, maybe a little overtime, maybe gold starts to break on up higher. It rejects that level, comes on back down, and instead of sitting here for hours watching, I could just see what it did for the entire day. And it just kept on falling, and there's no setup to buy for the rest of the day. And it's good that I did not trade, because if I was looking for buys, I would have gotten chopped up and stopped out the whole day. If I was looking for sells, it also would have been quite difficult. As you can see, quite a few sell setups has failed. There was actually a TC South that happened right around here, and it did drop, but it ended up reversing, and you would have been stopped out. And then there's like another potential trade down here that you could have took, but this is well after the session was over. And yeah, it kind of just looked like it wasn't really moving. And that's it for my session. So what I'm going to do is I'm going to save the project, and it's always going to be there. So next thing is I want to go into the next day, so I can just fast forward it the next day. I'm going to trade the euro dollar now based off the London session, and I'm going to get straight into this because this is sorry about that, I stuttered. This is a tutorial video. So I do recommend you to take your time and watch this video and watch it through. This might be a little bit longer than a normal video because I'm instructing you on how I backtest using this Forex tester software. So this is exactly how I do it. And I just wanted to record a whole session. So for that day, I broke even. I did not take a trade. And if I took longs, I would have been chopped up. I would have been stopped out. But according to my rules, I did not fail any trade. I just I preserved my capital for the next day. So 16 o'clock is London Open, and I'm gonna do the same thing with the euro dollar. I'm gonna mark off my levels based off the weekly. We can see my levels are already marked off based off the daily. I already did all this marking off for you, so you don't have to do this. The 15-minute, for some reason, it's not showing my levels, but all the other time frames are. So let's just keep that going. Let's just start fast forwarding it. We can see it's 154. I press the forward bar, and it's going to forward it every hour because this is the hourly time frame. We can see that it skipped the weekend. Now we're on to the Monday. This is the next trading day, 13:59, 14:59, and I like to start like 30 minutes before the session opens. So we're going to go that 4 hour, see if there's any new levels. There's a swing low, swing high right here. I could mark that off. Like I said, for now, I'm just going to keep on marking off these little inside moves just for now. That's that. Double tap. Yep. Sorry about that. Yeah, that's okay. Just so it doesn't move and shift around when I start trading. And we're going to do the same thing. We're going to look at the daily time frame. It's bearish overall. We can clearly see that on the euro dollar is bearish overall. Looks like we took out some lows, start pushing on up. That's a bullish sign for possible reversal intraday. Still bearish on this time frame. If you can't see it, you can always zoom in, zoom in, zoom in, so you can actually see that price action real nice and clear. We are moving kind of on an uptrend, but the last major swing low was down here, so we are still overall bearish. I would not trust any buying right now based off that 4 hour, but we are pushing on up. So the question is, can we continue moving on up to potentially retest these major highs at 1.05391, possibly? Moving on to the hourly time frame, we can see that overall we're still bearish. Everything is bearish. So for me, I personally would like to look to sell the sells. 30-minute is also bearish. We can see context matters. That's why I always put context first. Context, pattern, trigger, all the way down to the 5-minute time frame. The 5 minutes starts to look a little bit more bullish. So if I am looking for longs, it would be strictly off a 5-minute time frame. But we are at daily highs, and it does not look like there's any liquidity to the left to buy into. So I'm going to leave that one alone, and I'm going to go back to the 30-minute and get myself prepared for the session. But press the resume button. I usually have it on the fastest speed when I know that there is not anything happening at the moment and I'm not interested in looking. So I'm going to leave this on the fastest speed, let it tick into my London Open, and I'm going to get ready to potentially trade. And when I do trade, there's a tool called a Forex Speed Up, which is integrated within the platform, so you can execute on the fly like it's a real platform. And I'll show you how I use that when it's time to trade. Don't worry about it right now. So right now we can see that it is simulating that price action by the minute. We have 1544, 1545, 1546, and it is taking in real time. Not much happening because I can't buy it off of this time frame. I can't buy it off of this time frame. To buy it off of 5, so I can look at the 5 to see if I see any clean setups. I see absolutely nothing. So if I don't want it to take any more, I can just forward the bar by 5 minutes and see it close. So now we're getting into the open. Based off the 5 minute, do I see a possible long? Absolutely not. I don't want to trade this. Based off the 15 minute and 30 minute, do I see a short? Absolutely not. Why? Because we're above this major level of support. So I would like to see price kind of push on into this major level of resistance around 1.0362, or we can bounce and close down here. So there's nothing for me to do right now. So at the moment, I'm just going to keep it moving. I'm going to skip through the bars, forward, 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 forward. And it's pushing up on that 5 minute, which is nice and clean. But because I don't have anything to the left, and when I zoom out all the way, there's nothing on the left. And don't zoom out to the point where you can't see the physical bodies of the candle bars or the wicks. That means you're zoomed out too far. You want to zoom out just enough so you can see the most price action without it becoming like invisible. So right now, there's a little pullback. The question is, can I see a possible long into these highs? How far away is the highs? Take a look. Still a significant level above. I'm going to measure and see if I already get into these longs, if it takes out these lows and starts to trigger. Stop loss will be about maybe 5 points. I have about 1 hour. It's possible to get into a possible long. Do I want to? It takes out these lows based off of where this wicks. I can start to measure. I'm going to slow the speed down as we start pulling up and look for potential long right now. So based off of this, I want to make sure that I use enough spread for so give me a second. 33, 52, 33, 65-ish, right? So this is going to be about my entry. About 5 pips. Yeah, it's enough for 1 hour. So what I'm going to do is I'm going to put a buy stop because I don't see any setups. I paused it, by the way. That's a good thing about this. I can now ask myself, do I want to trade? And the market's not moving, so I eliminate that pressure until I press the play button. Based off of what I can see, we're in the middle of a range. Price is clearly bullish at the moment. There's no reason for me to actually short it. And based off of this, if I do want to trade this session, we're about 1 hour in trading since pre-market. 30 minutes is the London Open. I have approximately 1 hour left to trade. I need to see it reject these major highs in order for me to short, right? Or I don't trade today because if it comes on down to here, we're kind of in that little tight level. And I don't think price is going to break this level of 1.028. So at this moment, my only option is to look for buys. So I got to ask myself, is this a good buy? Yes. One thing you could do is you can go to the order tool. You can set up a market order, which makes you buy it right away. Or you can set up what is called a pending order. Pending order, you can see you have the symbol, the type you want to do buy stop because we're buying lots. If you don't trade Forex, you don't know lots. Don't even worry about that. Calculate with risk percentage. And as I usually do, I usually use between 1/4% to 0.5% for trade. I'm going to use 0.35%. And it's going to automatically calculate based off your account balance. You can see the balance at the bottom is 50,000. And it's going to automatically calculate the risk based off of that. So then I do my entry price. My entry price is going to be, there's always spread in Forex. And if you don't trade Forex, you don't have to worry about that. But because I trade Forex, I have to worry about that. So I usually use about 2 pip spread. So my entry is going to be like up here. Then you can do the stop loss. The stop loss is going to be you could spread, so about 5, so about 7 pips down here. That's going to be my stop loss. The risk to reward ratio is not that great, so I don't really want to trade this because the risk reward is not that great. So if I want, I could actually modify this. We can see that the bar was green right here. Give myself a 2-pip spread, stop loss. So it's about 7 pips. I got to ask myself, is this worth it? The thing about Forex is that because I account for spread, it could be a little bit lower than 1R, but just right around it. So right now my stop loss would technically be about 5 right here. But because I add the spread, it's about 7. This could be a possible loss, but we'll see. Forex does move slightly different. And my profit target is going to be at least 2R. I'm going to do at least 1R. And I'm going to place my order now that I have everything set up. So boom, there we go. My order is set. I can modify it, drag it up and down. It's going to give me higher profits as it goes in my favor. And then the stop loss, though, you don't want to move it because it's gonna increase your risk. If you do want to modify your stop loss, you have to delete the entire order and then do it again. Or you can, I believe, you can double tap. Nope, yeah, you have to delete the whole order. Or you can go into here and yeah, there's usually a bracket called pending positions, but I don't have it. So yeah, now we can just press the play button. I don't know if it's gonna be a win or loss. Like I said, I have a spread included, so it's a little bit different with Forex because futures you can actually take this straight, but with Forex it is slightly different because you have that spread. So I would like to see this pull back a little bit more, but I'm in the trade, and while I'm in the trade, I can actually slow it down. As you can see, it did take on off. I'm gonna explain that in just a moment. So with futures, there's no spread, but with Forex there is spread. Spread is what the broker charges you to get into a trade. It's usually less than a pip, but that spread makes Forex a lot different from futures. It's very similar in most concepts, but spread is one thing that separates Forex from futures. And that's why I like futures is because they don't charge you a spread. Forex, they charge you a spread. Sometimes it could be if there's high news or high volatile volume, it could be up to 2 pips. So you don't know. So I usually use like a 2 pip buffer. So when I got into this trade, I didn't use the spread to determine my trade. Instead, I just used based off of that entry stop loss. It was going to be about 4 pips, and then I measured. It was like okay, 4 or 5 pips. There we go. That's all I did. And then I added my spread. So usually my risk to reward is a lot lower when I trade Forex than when I trade futures because I count for that spread. But for my barrier of entry, for me to get into a trade and determine if it's a good trade, I just measure it based off of, without the spread, if that makes sense. Is it at least 1R without the spread? And then I add the spread and then I get my trade. So as you can see, I'm barely up any money. And this is one reason why I don't like trading Forex anymore is because you're giving a lot of your profits to the broker because you're paying a spread to get in the trade and a spread to get out the trade. And you also have to account for the spread when you're actually getting your entries ready so you don't get stopped out. So Forex, it could be very disadvantageous if you're trading on the lower time frames. If you're trading on the higher time frames, Forex is still pretty smooth because the spread is not that high when you're looking at the daily chart or the hourly or 4 hour. But when you're looking at the 5 minute and the 1 minute, the spread can kind of take up a chunk of that trade. As you can see, it was like about 4 pips or 4 points for me to get into that trade. That's what I'm charged. And it's obviously not that great, but it is what it is. I'm just showing you the trade based off of what I'm doing. So let's press the play button again, resume this. And I slowed it down to see the price action so I can commentate in real time. I'm going to zoom in so you can actually see the bars a little bit better. You can see there's no bottom wick here. There's a pullback, there's a trigger, but there's no bottom wick. You can see it's moving very slow. So what I like to do is speed that junk up. This is the fun part. Up, there we go. It's pushing back, pushing back, pushing back. pushing up, pushing back. It's already achieved this target, but I'm basing it off of the bar close. So we can see we already came up to that high, but it didn't give me no money, and I don't like that. So for me, I could slow it down, and I could tell myself it was red, it was green, and then it turned red. Correct? So I should be out of this trade because to me it doesn't look so good. But I want to show you based off of this. Looks like a potential loss. That's a better pullback, but price is no longer bullish. I'm gonna keep my stop loss and just keep it running. So in futures, I would have already been out of that trade, but because it's Forex, I have to account for the spread. And I have my same rules. I have a 1 bar aggressive stop loss, so I gotta just wait for the bar to close, and that's when I place my stop loss below the specific bar that closes. Looks like we might start reversing downwards and hitting that stop loss because there's no liquidity to left. So let's just see the stop loss get hit. This is what I don't like about Forex is that the trade could be a solid, decent trade, but because that spread, you're like not taking the best setups. There's another possible setup right here that I can get into. It would be the RB North. There we go. You see that spread? So it does this all the time in Forex. It will come very close to that stop loss level and then start moving in your favor. And that's why I accounted for the spread. That's what exactly what I was saying. That move was made with the spread included. So the broker spread pushed price damn near taking out these lows and then it moves up. So Forex is known for that. It has a lot of fake outs. Futures, the price action is a lot cleaner. So you're starting to see why I like to trade futures over Forex because it does this quite often and then it takes off. And then it's like, oh, I missed a move or I should have been in that move. Yes, that is true. So based off of this close, I can trim my stop loss. It does this all the time and I hate it, but it is what it is. And I'm still aiming for that 2R. So I'm going to slow that down and I'm going to trail this based off of the low of this bar. So we're going to do 2 pips. So this is, or 2 points. So this is 2.1. Stop loss is going to be about 4 points. And there we go. So if this closes bullish, then we're going to trail it 4 points off of that. Another thing about this is I can't do partial profits. So I technically will be taking off half my profits right here, but I cannot do that right now. So that's definitely an issue too. It's not going to allow me to do that. As you can see, it won't allow me to close a partial. So I have 2.48 lots. I'm not allowed to close. If I sell 2.48 lots, it won't close it out. It will actually put a sell order in. So now I'm hedging, and that's a whole nother topic. But there's a lot of flaws with Forex, which is why I don't trade Forex anymore. But futures is much better trading, much better consistent results. So right here, I'm just gonna wait. I have to wait. See my targets above. Remember, I had a 7 pip stop loss. I'm going to aim for 14 or 2R. Maybe I'll get farther. One thing I like about this, though, is I can measure this wave size, and I can see just how big it was, and then I can project that wave. So this is about 21 pips. This one could go up. Oh, sorry. This one could go up maybe to that target. So I'm going to aim for about 2R and make this a one-and-done trade. When this bar closes, I can slow it down, and I can trail my stop officially. I am in the money. You can see that I'm up. Will I make about 1%? Clean, clean. It was a good trade. Everything was solid. This bar has not closed yet. This is a massive bar. Okay, so one thing I could do now is I could trail this stop damn near to break even. I mean, I'm just going to trail it right here. If it comes on anywhere below there, I can get out. It's actually a pretty massive bar, and because I cannot do partial closes, I'm just going to do, if it turns red and it goes 2 pips below this low, I'm just going to get out because I don't like that. So this is 11, this is about 11 points, so we're going to do about 9. If it goes down here, I'm getting out the entire position and I'm going to collect my money. But if it keeps going up, cool. Dope. See, now I'm out. Start to pull back and retrace. It was just a massive bar and I didn't want that. But it was good. I made $215 on this trade, almost 0.5%. So that was actually a really good trade. It was a really good example of what I do and how I do this. So now I can evaluate that trade. I paused it and I could look back at that trade and I could say, hey, that was a really good trade. We're coming to resistance. Do I have enough time to short or do I want to wrap it up and call it a session? We can see it's currently 5:03 p.m. my time and we have about an hour remaining of the session. Usually my endurance is pretty much like lower at this point if I'm trading in real time live sessions, but because this is a simulator and I was able to simulate so much time forward, I actually move myself in the future. My mind is still fresh and I can still perform at peak levels because I still have the energy to do that. I have the mental capital. So now I can assess this and say, we're coming into that level of resistance. If we come up any higher, I don't really want to be buying this into this resistance, although we could break on up higher. Um, and if this was futures, I would have trailed out partial position right here, and I'll sorry about that, stuttered again. I would have left the rest to run, but that didn't happen. I had to get out because Forex is Forex. But we could see the rest would have ran, and it would have hit my 2-hour target to the T. So that's one problem with Forex, but it's okay. Now we're at that major level of resistance. So what I like to do is I like to wait for some potential sales. It is moving on up, and I do have an issue. I It was moving too fast for my own good, but as you can see, we did pull back, we did trigger. I paused it because I need to assess to see if I would have took that trade. Stop loss would have been like 12 pips coming on to here. You could get barely 1 hour, but this bar right here is a little bit hard. When I see these little dojis, I just leave it alone. I don't want to touch it. It looks like could keep going up, and it does. So now I'm gonna look for some potential sells, but I'm not gonna look at it based off the 5 minute. I'm gonna look at the 15 and 30 because those are my bearish time frames. So at this moment, yes, that would have been a really nice long had it keep going. But like I said, on futures, I would have definitely closed out partial position right here, let the rest run, and the rest would have pretty much ran to the resistance level, and I would have collected 2 to 3 R. It is what it is. Forex is slightly different from futures, and a win is a win. It was a good trade, great. It was a great projection. The whole entire idea, the whole entire forecast was right, and that is something that I can confirm. So now I'm going to look and I'm going to look at the 15, 30 minute. It's pretty bullish. 15-minute looks like the most ideal setup. We can see a little pullback about 30 minutes ago, and we can see that price. If price rejects this level, comes on down into the 1.034 level, and shows a nice setup, we could start looking for some shorts based off the 15. So what I'm going to do is based off the 5 minute, I'm going to now move the bar forward. I have about 30. I have about 20 minutes left. You can see that nice clean rejection, but there's nothing. So I'm gonna wrap the session off saying it looks like it's gonna continue bullish because price did not set up, and I'm gonna call it a day. So in the past 2 sessions, I made 0.5%, and that's really good. And I was able to do that in under 1 hour. Now I'm gonna wrap this video up by doing one more session, and I'm gonna trade gold. One thing I have to note about gold is it moves the best in pre-New York. So it will move in New York session, but usually like an hour before New York opens is like the best time to look for entries. That's one thing I forgot to note. So let's move the bar forward on this just to see what would happen. Still nothing. 15, 30, no setup. So that's going to be it for my session. So price is pushing on down, but you can see, and by moving the bar forward, you can actually save time, save a lot of time. This is 16 o'clock. Now it's pretty much already pretty late. Price is just coming back into that level. but it still has a way to go, and I can assess that. So for me, I'm gonna leave this alone and just say maybe we're gonna be grinding sideways for the rest of the session. We could keep dropping. There's that drop, but because I'm already done with the session, I can't trade no more. If I remind myself of the rules, that is what it is. I could move the bar forward, and that was a great reason not to sell. It pushed way on up. So if you're still looking at the 5 minute, there's no way to buy. It's just kind of like, whatever. And yeah, now we're going to fast forward to the New York Open. So that was a great trade. What was the setup that I took based off that 5 minute? It was a TC North, just for you to know. So there we go. It's a TC North. Let me zoom in so you can see. Zoom in a little bit more. That was a TC North. We pushed up, we pulled back, and there was a trigger right around here. That would have been the best TC long, and that's where I took it. But based off the spread, because it's Forex, it did fake people out. That's why I have that wider stop to protect myself from that. And yeah, we ended up going up. Profit ended up going. I ended up taking 0.5%. So pick off like 1R. It had the potential to move 2, maybe 3R, and that's something that I could take note of. I could screenshot this if I want. So I'll show you how to screenshot this right now. So if I want to screenshot this based off of what I see, I can actually go onto my charts tool, click on screenshot, and I can do it based off the image, click on the OK button, and boom, it screenshotted it, and it saved it to my screen. My Forex tester has its own folder for screenshotting, and that's where it saved it. So next up, I'm going to look at the next session in just a moment. I'm going to show you. Give me just a moment while I grab some coffee, and I'm going to press the play button to trade gold next. Gold, I'm going to be doing the same. My level's already marked off based off of the beginning of this video, so that's one thing I don't have to do the next day is mark off levels. I do want to mark off my most recent 4 hour to see if we do have any major levels. You can see this horizontal line above is the same. It's pretty much in the same area, so I'm not going to move it. You can see that major swing high is like right around here. But I could definitely just right into here, and then I want to do like the major swing low. It's in the same level as before, so I'm not gonna touch it. This thing is kind of jumpy. All right, so I'm just getting myself ready, and yeah, I'm gonna take a quick break, and come right back because I've been talking for a while. All right, so welcome to part 2 of this video. If you haven't seen part 1, definitely recommend watching it to understand what's happening. I did have recording prior to this, but it stopped for some reason, technical issue. So I'm just gonna record a part 2, and let's just continue with what I was saying. So right now, I marked off my major levels on gold. Right now, we can see that gold is currently primarily bearish. Looks like we're coming into a major level of resistance. Look to the far left, we can see the major level of resistance right here. And if we can break above this major level of resistance coming into the pre-New York Open, then I could look for some longs. If we reject it, then I could possibly look for some shorts into the major level of support, which is next level is around 2614. That would be pretty much what I'm looking at the moment. So then I'm going to look into the hourly to see what we're doing. Hourly took out the prior hourly highs. I'm going to forward it because I'm going to start trading around 20 o'clock, around 20 o'clock, 20:30ish is when I'm going to start trading gold because my time gold starts moving an hour before New York Open. Our New York Opens at 22:30 actually. Apologies for that. Yeah, I had some errors, some mistakes. Um, but this is why we practice so we can make sure that we don't make these mistakes anymore. I think in my prior video I traded where I said that I was New York Open at 20:30. It's actually 22:30 my time. So that would be 10:30 my time, which is about 9:30 a.m. New York time. So apologies for that if I did mess that up. But yes, so I'm gonna be started trading around um, 21 o'clock, and I'm gonna trade for an hour and a half to 2 hours, see if I have any gold setups. Um, so let's fast forward the bar to 21 o'clock. So we can see 1959, very bullish, 2059. So we're getting ready. Looks like we rejected that level, and this is a possible sell. Looking at the 4 hour, we definitely rejected those levels, and it looks like we could possibly drop down. If you can't see, I can zoom in actually so you can actually see more detail. Looks like we rejected the major levels of 2647, and we could possibly take on southbound to 2636. So that's what I'm going to be looking at during this session, and I'm going to get ready to trade. The good thing about Forex Tester is, I remind you again, is that I can pause the charts. So I don't necessarily have to have the market moving. I can pause it, I could fast forward it, I could rewind it, I could speed it up, I could slow it down, and I could also skip bars. So this is fully custom to your own pace. This is a great thing to practice on. So we are rejecting that major level. Looks like we closed kind of doji. Might be a little tricky on the 4 hour, but we are rejecting based off that 4 hour. So possibly looking for some shorts coming into the 4 hour. Once again, the context is bearish on the 4 hour. The hourly context is slightly different. We can see that it is, it's still bearish. 30-minute time frame, bullish. We have a conflict. 30 minutes bullish, 15-minute is bullish, 5-minute is actually bearish. So will we have another trading session based off the 5-minute? 15-minute, we took out the prior hour highs. We came on down. I would like to see this next hourly close below the last hourly close, and then I'll look for some shorts. And it needs to happen based off the 15-minute. I'm going to just mark off some little minor line. I go to graphic elements, and I have maybe like a little ray. I like to use rays. Um, mark off this little 15-minute level right here. So yeah, I just kind of want to see price like come on below that level, and I'll be able to look for some 5-minute shorts. If not, I'm gonna leave it alone. And then based off a 30-minute, it is still bullish. So for me, I would also like to see price close above this major level, but we might have a little conflict because we're in between. We're in between 2646 resistance and 2651 area. And that to me is a small level, a small zone. So to me, I don't want to trade in tiny zones, especially if it's off a 30-minute. I would rather break the 2651 level, and then I'll get trade this bigger level up into 2662. So that kind of helps me with my bias getting into my session. I'm asking myself questions such as, what's the most ideal? What's the most reasonable direction to go? Kind of doing a process of elimination, if then. Um, And yeah, I can see that we're rejecting right now. It's the smartest move to look for shorts. And if I'm looking for shorts, I need to look at that 5-minute time frame. So unless we break above the 2646 level, that's going to be what I'm trading. I'm going to press the play button so we can start moving the bar as we're getting into the session. Also, you can see any major news ahead. There is no crazy news ahead, at least not for several hours, so that's good. So I'm just looking for a setup on the 5-minute now that we started the session. I can slow it down if I want to talk a little bit about it. So as of right now, I don't really see any major setup unless we can break that level, like I said. So I'm just gonna wait. I just gotta wait. If I do see anything different, I'll let you know. But right now, we're gonna keep waiting until price can show some momentum to the downside, and that would determine my move. If not, I'm gonna just keep waiting. Nice, clean. Now, can we close below? Same stuff, just a different day. As you can see, the markets are less scary when you're actually able to control the price. There's that nice little close above. Now here's a question. Now that we have a new swing high, so you can see there's a swing high right here, There's a huge swing low down here. There's a swing high up here. Kind of complicated. You could short it, but I'm just gonna wait. Remember, I don't like to guess, and I don't like to be in a state of mind where I'm not fully convinced. So yes, there's a possible short. If this closes bearish, we pull back, retest, and short down. There is a possible short, but what I'm seeing is last swing high uptrend was right here. Swing low, swing high. Yeah, it's possible. It's possible to short it. I would need to wait for this to close, and then a little top wick, and then short to the downside, and we'll be coming all the way down to 26.36 and beyond. That's my move. So I'm just gonna wait, let this close out. I'm gonna slow it down as I get closer to the 5 minute close. Um, Still got like a minute left. Okay, see, now slow it down. So I want to assess a couple things. Did it create a big enough of a top wick? Yeah, it was all right. It was a little top wick. In Forex, I like to see at least a pip. Damn, it's gold. It's hard to tell. It's a top wick, so I'm gonna just put my entry somewhere down below here, and then my stop loss is gonna be slightly above here. Because it's not Euro USD and it's actually gold, I don't do the 1 pip, 2 pip rule. I just kind of use my own. That rule only really applies to Forex pairs, such as currency pairs like Euro dollar, Australian dollar, stuff like that. When it comes to commodities like gold, Forex commodities, I don't use the 2 pip rule. I still use the spread. So I just kind of use my eyeballs. It's very subjective when it comes to gold. So you'll be able to see me do it right now. So orders, click pending order, and same thing, 0.35%. That's a good thing about this. It doesn't really change unless I change it. And then I want to do it based off of this close. I don't really know based off of this, like what a pip is, to be honest. I'm just going to put it down here. If we move down to here, I'm going to get my entry. My stop loss, same thing. My stop loss is going to be 0.35%, whatever I want. Stop loss is going to, since this is going to be considered an RT south, my stop loss actually could be right here into this level. Plenty of space. This might even be too much space, but it is Forex, so I would like to give myself a little bit more space than normal. And then take profit is, there's nothing. Like we can short this all the way down here. That's more than enough. Um, how far do I realistically think this might go? I think we might be able to take out these lows down below here, but this is the next major level. So let's just mark it down here for now, and then I'll be able to move it. Oh, it's a buy stop. I need to make sure it's a sell stop. It won't put my order unless it's a sell stop. Okay. Um, Place that order, and there we go. It's placed. As you can see, everything is pretty much directed towards what I want it to do, and the market hasn't moved. Now I press the resume button, and it can remove, and it can move. So let's see if it gets to my entry. We did have that little top wick. I have plenty of space above and plenty of space for it to actually trigger me in. I want to see volume, momentum pushed into my order. That's why I have it so far below. I don't want to see it fake out. There we go. That's more than enough. We should be in already. But yes. Now for my stop loss, it's a little bit far. So I can actually risk a little bit less than that. But yeah, I can keep it up here. Just letting you know, that's a little error of mine. I put my stop loss a little bit too far, but it's okay. Now my trade is set, and now I could just let it run. We could see that while we're just ticking, we can look at all time frames, and it's still moving by the tick. We rejected these levels on the 15 minute. We rejected these levels on the 30 minute. We could see that. So for me, there's absolutely no buying. There's no reason to buy it, and that's a good thing to be able to take note of. There's absolutely no reason to buy unless we stop me out and then start breaking up higher. Then I'll look for some longs. So the thing about this is the reason why it's not super realistic. It's the most realistic to realistic as you're gonna get because the bars are ticking. But the reason why it's not too realistic because you can actually pause it. You can actually slow it down. You can actually speed it up. You don't know what's happening just right now. So in real time, you don't have the option to speed it up or slow it down. So you have to sit there through all the little ticks. But for me, this is back testing, so there's less emotions. Might be a little emotional when you first start doing this because it's like you're seeing like results right away, which could be a little scary. But yeah, let's see. Zoom out so you can remember the context. Context is overall bearish, left to right. You see that? And yeah, just another day. So we're gonna try to get some money. Speed it up because I don't want to wait. Remember, these bars are 5 minutes long. So you would actually be sitting here through that entire 5 minutes. And yeah, if you're familiar with trading with me live in real time, like we've done, then you understand the type of emotions that can be going on during this time. But now you're just skipping through. So you're kind of like, this is what I mean by this is really good for training because you're able to be mechanical. You're just trading according to your rules. You're very mechanical. You don't got to worry about too much. You're just taking your trades, keeping it moving, taking the next trade, keeping it moving, and there's no emotion. You're just objective. It's like, okay, I got to do this. I got to do that. I got to do this. Look at this now. Pause. What's the general rule? Is that we're gonna put a stop loss right above that 26.45, but I can't move it yet because it's in the same area, so I don't want to move too much. Apologies, just got a text message. I know that's not the best thing to do during a trading session, but this is a prac testing, so you can also pause it. I literally paused this video. That's why I have a part one. I went to my kitchen to get some food, and I just made a quick meal, and I came back because I had my headphones in. It disconnected my thing, which is why I made a part two. But yeah, I made a quick meal. I ate it. 15 minutes later, I pressed play button. You didn't even know that. So that's one thing you can do with this software is you can pause it, go about your day. You can literally save it from here and come back later and be like, okay, where did I leave off? So it's like it's really cool to have this. But let's keep it moving. I'm gonna press the forward bar. You can see I'm up. This is how I get the confidence to take the trades I do when I trade live, is because I've been doing this on simulator. I'll show you some projects in the past so you can see how many trades I actually used to take. Um, but we'll talk about that later. Let this run. We're currently up like half an hour. It could stop me out. There's always that possibility. I don't want it. I don't want to keep skipping it too fast though, because I want to actually trade like it's realistic. I don't want to see the results too fast. So when I'm in the trade, I actually let it tick because it's not the same if I just I entered here, let's just fast forward an hour and see how this played out. No, because when I'm really in the trade, I want to see how I'm actually feeling, how I want to actually see the bars moving by the tick, and this is a really good way to do it. See, we're still on down. If we break down below, finally I could possibly trail my stop, but not yet. It's still kind of in this little area. Clean, clean, clean. Another trade in front of you, and you can see, wow, right? Wow. Gold is still taking off to the downside. So far, we haven't taken any L's, straight dubs. I don't have a reason to trim my stop loss just yet. 3 minutes left in this bar. We can also, while we're waiting for boards, we can look at 30-minute. Absolutely no way to buy. There's no reason to buy that. 15-minute, absolutely no reason to buy that. And like I said, I think we're going to take out these lows right here. Looking at the 5-minute, there's space. I just want to look and trail my stop aggressively if we get around the major level of support coming in. We're coming in with a huge volume. So for me, I'm going to trail this to break even now, even like right above here. There's no need to hold that. Slow this down. Slow it the heck down. If we taking off. In real time, this would have been like 10 minutes worth of price action. So there's no top wick right here. So when there's no top wick, I'm going to trim my stop loss right above this high because it's telling me that this top wick, it can keep going as far as possible. And if it creates a top wick, rejecting this major level support, that's a red flag. So yeah, I mean, I'm up like 3R, or not 3R, but 2R and some change, 2.5R, dropping. Take these levels out, and this is real trading. Like I broke it down in front of you, and you're actually able to see me get in and out of this trade. Like I'm not hiding nothing. I'm not sugarcoating nothing. This is just everything that I broke down. I didn't cheat. I didn't look forward and do this while the video was paused. I'm just taking this momentum, drag it. These are the type of moves I like to see, and this is what January brings. This is only the 6th day of January. These are the type of moves that I like to see. But December was really choppy, so I wasn't able to see these type of moves. So look at dropping. Can we take out these lows? It's heavy. It's dropping heavy, heavy. Still moving. This is still the same 5-minute bar. Okay, we're creating up. We're rejecting this level. Let's see. Let's wait. How would I feel emotionally right now? I would feel like I want to close soon because I don't know how it's gonna wick. But we have 2 minutes left in this bar. So let's speed it up just a little bit. I'm still gonna hold it. It's a lot of volume. You see that? Wow. Okay. So my stop loss is gonna go where? It can go right above this most recent high, or I can just take my profit. If this was futures, I would have already taken half profit off and leave the rest running. But because it's not futures, I can't do that. I'm up $800, literally 1.5% off of this one trade. I'm gonna leave it, let it run, let it run, let it run, let up. I'm gonna close. I've had enough. What I'm gonna do now is I'm gonna go over. I'm gonna go over to orders, close order, and I just made $800 and some change. Check my account history, and you can see that that was all in one move. So in 2 trades, I was able to make one. I made 2% in 2 trades, and this is what January brings. It's a really good opportunity to practice and refine your skills and make you understand how to actually trade um, efficiently. Stick to your system, stick to your plan. That was an RT South, and it went all the way to the ground. I waited. I'm gonna pause this. I'm gonna let this run, but I'm done with this session. That was a big trade. Usually after a big trade, I'm done. It's 41 minutes into the session. Can I keep trading? Absolutely. But do I want to? No. Usually after a big trade, I walk away. I had a big trade. I don't want to give all that back, and I don't want to. It's like usually when you win big, it's recommended to walk away. Walk away. That's it. You won big. You did your thing. This was enough to cover multiple trades. Like this trade, I risked approximately what 150, and I made about 800, $900. That was almost a 6R move in front of you. And this is what I said about January. January, it makes up for everything that December lacked. So December lacked the movements and the flow. January, everyone's coming back from holiday. Everyone's trying to make bread. The markets are flowing, and this is why I look forward to January. But that's it. Now what I'm gonna do is I'm gonna evaluate my trade. I'm gonna assess my conditions. I'm gonna see what happened. And at this moment, I've been trading for about a little bit over an hour. I was able to take out 3 sessions. I had gold the day before, so if I only traded gold during New York session or pre-New York, I would not have made money the prior day, but I would have preserved my capital, came back the next day, took my trade, and I would have made 6R in one within an hour. And that's the power of patience, having your system down. I'm able to actually show you that my strategy is muy bien. It's very good. I have a very good understanding of how to trade. These levels are impeccable. Like this is the type of trading that I like to see, and this is the type of price action that I like to see. Everything has been done in front of you, from the rejection of the major levels to marking it up in real time, raw in front of you. Like this is nothing sugar coated. I didn't know how to. If I was able to see this in the future, rewind the charts and talk about my process, that's more work than actually just doing it. So obviously you can tell that this is not a magic trick. This is reality. 2 trades. If you're trading Top Step, and you gotta have, what is it, 4% to pass. I believe it's 4%, maybe 6. We already made 2% in 3 trading sessions. 3 trading sessions, 2 trades, and that trade for 215, that could have been more had I actually held it. But it's okay because the next day I just focused on this and the money's made. It's still falling, so I could have definitely still held it, but that's just my own fear. In my head, I'm like, it's wicked. It's wicking out. Something I got to work on in the future. But usually I would have took a partial if this was futures. So I would have took out like most of my position right here, left the runner, had a hard stop right above here, and then let it continue moving down. That's what I realistically would have done if this was futures. But because this is Forex, it can be a lot more volatile and tricky. So I just got the heck out. Uh, but yeah, that's pretty much what I want to do. But at this point, I traded 3 sessions in front of you. Even though it only has been an hour, it was 3 different sessions. And for me, my endurance is a little bit fried right now. So I'm going to take a break and come back and do this again later. But in the past 12 hours or so, I was actually able to trade this 3 sessions with you. And I actually, like I said, I had some trades in the Euro USD. It's a bummer. I took a screenshot of it. So basically, in the Euro USD, I actually made $800 as well, and that was within 1 session. And that was the first session. That was the day prior to the start of this video. But I made 800. So within 2 days, 800 plus, what is the balance? I don't know the balance until I look at it. 800 plus 1,100. That's almost $2,000. That's almost 4% in 2 days of trading. That's what January brings. So that's what I was saying. Is it possible to pass this within a week if you're trading? Absolutely. You could pass this within a couple of days. Some people. Like, it's very much realistic. And you're able to see that I did this effortlessly in front of you. I talked it through. I commentated price action. I did all of that in front of you, and you're actually able to gain that confidence coming into the next week. Like, I know what to do. I seen this happen in real time. Like, I didn't just think of this in my head. I didn't just make this up, and I'm not just hoping when I'm trading. I'm trading based off of real shit, like real factors that actually work, time tested, that are proven, and the charts don't lie. The chart will show you what you need to learn outside of my lessons, and that's what you need to study in your trading journal. Take screenshots. I didn't put a strategy. I didn't put the name down because at this point in my head, I'm tired of marking charts up. I'm sick of it. I marked up TC, North, South, RBRT, BRB. I marked these up. All my strategies, I've been doing that for years. I marked them up so much that I'm just tired of writing it down. I know what I got to do and what I don't got to do. And if I start making mistakes again, then yes, I have to start writing it on my charts again. But as long as I'm performing well, I don't have to do that. You can see it's still moving. One thing we could do is we could just fast forward this now that my session's over. I think it'll keep dropping all the way. So this could have been potential for like a 12-hour trade. You see this? Still going. Still going. This is the real moves. This is the real moves of gold. This is why I like trading after Christmas. Like, you can make some crazy gains just by sticking to this process. You can make crazy gains. And this is all just a part of everything. Like, I would not enter another trade right here. Why? There's no pullback. This is just a pause. So it could start retracing. I don't want to wait and watch this so I can push the bar forward. Boom, bang, 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 bang. Nice. Nice. This trade had a potential to yield 10 to 12R had I not closed out so early. So I shorted myself of an additional 12R or 6R. Why? Because I was hesitating and I got out too early. One thing that I can work on is in the futures, I would have took some partials right around this bar. I would have left the runner and it would have came on down, and that's where I would have gotten out, right around here. I'm gonna study this chart. I'm gonna analyze it now that I'm done, and I'm gonna work on my improvements because that's my weak point. how can I allow myself to collect more profit? Because I missed out on additional 4 to 6 R. Maybe that's like 4 R, but I missed out on that, and that's a bummer. Because instead of $900 or $800, I could have made damn near 14, 1500 in one trade off of risking 150. So now that you're able to see this, this is a January trade, and this is January of last year. It's the same stuff, same thing, different year, same thing, different year, same thing, different year. That's just how the markets move. Holidays are holidays, seasons are seasons. But once you become a seasoned trader, it's just the same thing. It's just another day. It's a rolling calendar, just another day. So hopefully this makes sense. I know this has been an hour and a half video. I actually merged this video, which is why I didn't make a part two. So this gold trade was the part two, and I'm glad it actually did play out because you're actually able to see from start to finish. I marked off my levels. I followed my plans. I broke down price action, top down analysis. I waited. I was patient. I waited for the levels to be rejected from. I was patient. I found the right time frame with the right context, and I executed flawlessly without hesitation. Looking at that 15, if I was only looking for longs, I would not have been able to trade today. Looking at that 30, if I was only looking for longs, I would not have been able to trade today. Looking at that hourly, it was short, it was bearish, but it would have been really hard to trade that hourly because these are hourly bars. So looking at that 5 minute, waiting for the right setups, everything to play out, being patient, I got in and I had zero drawdown that whole entire time. That's exactly how I like to trade, and hopefully you gain some knowledge from this lesson. I'm not going to make it too long. I could literally trade on and on and on and on and on, but I'm not going to do that. I'm going to save this project. Okay, save, save, save. Make sure that this actually saves. Save project. There we go. Now, one thing I'm gonna do is I'm gonna actually open project, and you can see I have some projects where I was trading in the past. Um, I got all these things. Just a second. I'm trying to find my most recent 2024, 2025 full back test, 2025 back test. Let's check this one. This was a see. I haven't used this platform in months. I think the last time I used it was back in September. September was the last time I used it. But yeah, let's check out May 2025 back test, and it's gonna take some time to load up the bar. So I'm gonna pause this, and I'll press the resume when it shows up. So yeah, there we go. I have a crazy system that does work, and it is time tested. And I've taken thousands and thousands and thousands of trades using the same strategy. That's how I'm able to execute the way I do, and that's why I'm able to teach what I learn and what I'm doing. All right, so I'm back. That was fast. So you can see this. I was trading the 1 minute chart, strictly Euro USD. This was back in last year, but I just want to show same thing. I was like buying, selling, but my strategy was way different. I mean, it's the same strategy, but the way I was trading it was way different. But I was still profitable. But it took a while for me to get this 3K, and similar risk. As you can see, this was my results. I took 85 trades based off the 1 minute chart only, and only Euro USD. And yeah, I had wins, I had losses. It was on and off. But out of 85 trades, I should not only be up $3,000. Now that I'm better than I was at this time, technically after 85 trades, I expect to be up like 85K. Like no joke, no joke, no cap. Like I'm not even kidding. At least 30K, off a 50K account. At least half of the account built. 85 trades is actually a lot of trades. And you can see I have my history. You can see everything that I did. And I traded this 85 trades and I got, it was only 3K. Some people was like, wow, you made damn near 10% in a month. Sure, that's true. Um, and that it ended on the 22nd and I started it. You can see it said January right there, but I was skipping through the months. So technically out of 85, just 85 trades in total, I was up 3K. And to me, that's not great. Um, it should have been way more. And that's why I'm looking at this now like, damn, this was me back in May. So me now is much better than how I was performing back then. So I'm actually looking at this like, damn, 3K, that's it. 85 trades. And that's the power of continuing to practice, continuing to trade. Your future self is going to look back at your past self. This was me in the past and how I performed. And I could say, I could laugh and be like, ha, 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 ha. I was trading this at this time. I didn't even have levels at the time. There was so much that I was doing that I shouldn't have been doing, and there's so much that I was not doing that I should have been doing. And now I'm looking back because I'm much better than I was then. And this is one of the things that keeps pushing me forward in this trading journey is that I do see progress. And this is why I want to share this with you because you're able to see that even I, as a, in my level of trading, in my experience, I still look back at my past self and I'm like, wow, you know what? I'm so much better now than I was then. That is one of the best feelings in the world is being able to see that significant improvement and know that right now at this current date, it's January 3rd, 2026. I could look back at my past self and say, hey, listen, damn, you know what? I'm really, really glad that that I that I kept going. And now I'm looking at myself now like, yo, if I keep going now, oh, ain't no telling where I'm gonna be in like 2, 3 months. But I do know damn sure myself in the future is motivating my current self to keep going because my future self is sitting there eating real well and sitting there like, yo, you're eating right now. Keep going. Right now, I'm looking back on my past self and I'm like, yo, I'm doing way better because all I had to do was lock in at the time I did and I stood locked in. And now I thank myself. That's why I say always pat yourself on the back after a session, win or loss. I thank myself and I'm like, yo, am I the only one seeing this type of evolution? Yes, because very few traders make it this far. A lot of people want to flip money, make quick gains, gamble, and go on to the next niche. That's not how it is. This is a self improvement journey. So start slow, take off running. The marathon continues, and that's it for my video. Hopefully, you gained some insights and valuable lessons. And yeah, this is probably my best Forex tester video yet because before I had to redo my videos in the past a few times, but now I'm becoming so much better at doing this. Hopefully, you understand it. And yeah, you have a great 2026. I look forward to working with you.